The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me this evening. Good morning to our friends in Australia, or half of them, those who live in Queensland at least. It's still morning. The rest of the country's on daylight saving, so you're all over the place. Eric, good. Oh, you're up at Coolum, mate. Nice to hear from you. Eric's a tutorial guy. He's a retired, very senior airline pilot, lives the life of luxury in Dubai, but at the moment he's in Coolum Beach up in North Queensland. So yes, good morning to you, mate. Good to see you here. And Kevin, hello to you. Nice to hear from you. And what else have we got? Yeah, well, good afternoon to our friends in New Zealand. It's they're certainly well and truly into the afternoon. All our usual good friends are here today. Alan Varian up there, who kindly, he's a tutorial guy from long ago, and Albert. Alan told me to come and live here when I was coming to Australia. So you found a good place, Alan. Thank you. Jeremy in England. Nice to hear from you. I hope you're working hard on those spreadsheets, mate. Tyson, New York. New York is the place, eh? Well, not quite sure what the place is for, mate, but let me tell you, it's early summer in the Gold Coast of Queensland. It's a beautiful day. The sun's shining. I'm sitting here in a pair of shorts, and the Pacific Ocean is very, very blue. Looks quite marvellous. Cold and dark, Dean, is it? Sorry to hear that. Dean's is a tutorial guy. He's going to do another one in, next week if he gets around to returning the documents that I sent you yesterday or even the day before, Dean. We need to move on that. Chris A., he's a tutorial guy working through that. Nice to have you with us. Dave Bog, he's a tutorial guy. Dave Samuels. Webby, king of the Black Line Men. We've had some beauties, haven't we, on that? Ed Houses doing a tutorial now in some cold country there. Harold Foos, the king of the gold bugs up in Redding, California. Jay, good to have you with us. John Lisserman in Coffs, and John Chiwa, and Justin Woolley down in the God's country, the Hunter Valley, not far away. Boyd, Kevin, Manish in India. Manish has finished a tutorial. Let me know how you're going, Manish. We can have a chat anytime you like. Mark, he's just finishing off his tutorial. He's written me a nice letter about how he found the experience, which I'll share with you on the website later. The lovely Marilyn. Marilyn, I had lunch with Marilyn yesterday. We went down to Coolangatta, and Marilyn had a tiny piece of fish. I had some natural oysters, and a very nice lobster was great. Michael Pell, there he is. He just texted me as well. Steamy and warm in Panama. I bet it is, mate. Mike Murphy's the tutorial guy. Time I heard from you, Mike, we did some more work. Milton, Nick, a couple of Phillips. Oh yeah, Pierre, it's nice to have you. Rose, Rose comes from Montana. She's almost done a tutorial, but she's ducking doing the paper trading. Rose, I want to see that paper trading of natural gas for the whole of 2016. You really need to do it. I know it's a pain, but you need to do it. Vincent, he's about to do a tutorial sometime, not too far away, I hope. And William Ford, been with us, oh gosh, forever, one of our oldest members. Great to have you with us here. So, all right, I've said hello to everyone. Let's move on. I'm going to show you some really interesting stuff today, folks. I'm going to show you how to find super trends, and in the process of that, I'm going to show you some trading tricks. We've just had our trading here at the Daniel Code's just been so fantastic the last few months. I mean, you know, we're supposed to take off 1 week every 3 months, and here we are heading to the end of the year. We haven't taken off a day yet. The trading's just been too good. Every time I think of having a break, it's like, oh boy, the trading's too good. And it's been marvellous. Rose, did you do natural gas? Have I got it? Did you send it to me? We'll see. Excuse the side conversation. If you wanted me to see anything, folks, just go to the questions box, type it, and type in there and send it to me. Rose, send it off to me and I'll talk to you about it. And I know you're got some struggles. We'll just keep working with it. Okay, let's talk about super trends. Pretty interesting things. And last time we had a webinar, I talked to you, gave you the initial idea about overbalance of time and price. This is a very, very old concept. 35, 40 years ago, it was terribly, terribly popular. It got so popular that folks were trying to work out what was zero balance. If you had overbalance both up and down, they were trying to figure out what was zero balance, and there's actually a program called Zero Balance. It's totally useless, so don't knock yourself out trying to find it, but it shows the extent that people try to optimize things, getting right down to trying to find a daily balance point or zero balance, with the theory that if the market's above or below that point, it would tell you the trend. That's, as I said, a useless piece of kit, but it's interesting that this is something that was very, very popular years ago. It's also a very old concept. And when we talk about overbalance, we mean that the market has moved in a greater way one way than it has previously, or that it has moved in a greater period of time than it has recently. We can have overbalance in price and overbalance in time. So the simple way to find the start of super trends, for those of you who've done tutorials, go to a 6-day chart and look for staircases and waterfalls. And they really do identify the start of super trends. If you haven't done tutorial, then I'm going to tell you an alternate way that you can find these starts and movements on these markets. This is the Aussie dollar USD. I'll just get my highlighter so I can explain this to you. Here we are. Spotlight, they call it. Here we are. So here's this big bar here. This is a 6-day chart. And just let me bring this up on another computer so I can give you the dates if you want to follow through on this. Let's have a look. What did we find here? So this really big bar up here that I've got highlighted, this is a 6-day chart. 6 is the vibration of all markets. Gann used to say, those of you who've read or studied Mr. Gann's work, W.D. Gann, famous, I think famous for being famous, a famous promoter, stockbroker in Chicago, but the first guy to really understand the value in promoting his ideas and his writings. But W.D. Gann used to say, if you are worthy, I will tell you the number. And being worthy usually meant about 2 Buicks. It was Mr. Gann's favorite car and is a tool he used in his work. And being worthy was usually about 2 new Buicks in dollar value. If you are worthy, he would say, I will tell you the number, and the number he'd tell you is 7. And of course, that's wrong. And all of the Gann guys today, it's still a huge discipline. There are a total number of Gann guys. I even got some guy in India writing to me telling me he's a wonderful Gann trader, and it's all so good. And look, it may well be. I know I never want to diminish someone else's belief, but I figure I'm pretty much the world expert on Gann because I spent 12 years studying Gann. I had people all over the world buying so-called original Gann charts and Gann letters for me and everything else. I've got to tell you, it didn't work for me. One of the reasons is that the vibration for all numbers is not 7, as Mr. Gann would have told you if you'd ponied up the price of 2 new Buicks, but the vibration of all markets, the minor vibration of all markets, is 6. And that's why we use 6-day charts, and we use 6 in a lot of the other analysis that we do. So you have a look at this bar. This is a bar that ended the 6-day period on January the 11th, 2007. You can see this is, I haven't probably left enough of the chart in for you to see this clearly, but take my word for it that this up bar is the biggest up bar there is on the chart in recent time. In other words, it's an overbalance of price. The reaction of price upwards is greater than any previous um, reaction upwards in recent swings. So that turns the swing up. Then we run up into this high, which is up here. This is the 6-day period ending March the 20th. Now, if you do a 6-day chart, folks, and your ending dates aren't exactly the same as mine, don't panic about it. They'll still be valid. The ending dates you get on your charts are a function of when your data starts, and most Trade Navigator clients have different amounts of data and different start dates. So you could get different end dates. It won't matter. They just work all exactly the same. So March the 20th was this high, and then the market turned down. And you can see in this rundown here, it had a 1-bar counter trend on April the 21st, and another 1-bar counter trend, which may have been the first bar of the uptrend, although you didn't know it at the time, on May the 25th. So in terms of time, the maximum time that the market had corrected in the last downward swing was 1 bar. So right here, very shortly after the change in trend, on June the 12th, you get 1 up bar followed by another up bar and another up bar. So in fact, you have 2 up bars. That's called an overbalance in time. The market has now corrected to the upside for longer than it corrected in the downswing. So here's your downswing from here down to here. Only get a correction. You can even add this one if you like. You only get a correction of 1 bar. On this start of this rally, you get 1, 2, 3, arguably 4 bars up, 5 all the way. But all you need is 2, 1 and 2. So by the time the second up bar that comes on June the 20th, that tells you you've got an overbalance of time, and that turns the trend up. And as you can see from there, this market really takes off, and it runs right up into the highs, and that run up eventually is worth something, some part of about $4,000 per 1 contract. When it gets past its high and it gets to the 6-day periods ending on September the 28th, you've got that bar in red. That's an overbalance in price. That's the biggest down bar you can see on this chart. There's a couple of others much earlier on, but out of recent swings, that is the largest down bar you can see on this chart. So that's the overbalance of price that turns the trend down. Now, these markets that set up either a significant overbalance in time or price, starting from the blue lines, these are the markets that then go on to give you super trends. And for those of you who've done tutorials, the simple way is just take a look at the staircases and waterfalls. They're the definitive way of seeing the start of these things. This is Aussie USD. It's in a nice super trend down right now. And here's the next chart is British pound, Japanese yen. It will have traded by now. Same thing here. You've got this push down from the high, which is way back in August the 15th. You've got this big down bar here, which I've put a red box around. That's your overbalance in price. That's the start of a super trend down. And you get a rally then, and all this run down here, it's reinforcing itself. The biggest bars are the down bars. Here's another one. Here's a really big one. It's a bit hard to see because it's an outside bar, which is grey, and it's got mixed up with the other lines there, but that's a really big down bar. And then just off the low here, this is the first overbalance in price to the upside, and that turns the trend up. And that, in fact, is a staircase, start of a staircase on the 6-day chart, which would start off a super trend. Now, super trend doesn't mean it's going to go straight up. They're fast trends. Fast trends are caused by different reasons. This is a very normal, rational market. In fact, it's a market with a great deal of uncertainty in it because of Brexit. But you can see from that 1 bar, the trend has been up. It's consistently pushed up. There's been good money to be made on the upside trades, not so great, a bit more difficult in the downside trades. Let's see our next example. This is the dollar Huey for our gold bugs. I know a lot of you are interested in the Huey. For those of you that don't know, the Huey is actually an index. You can't trade futures on it. You can trade options. And it's actually an index made up of the unhedged major gold miners, the ones who don't price hedge their output. And it's very highly correlated with both gold and silver. And for that reason, it has some predictive qualities. Have a look what's happened here. February 16th, here we are, got the big overbalance in price up. Same thing, all the way up in this trend. The market's confirming that it's in a super trend up. These are the ones that really rip and tear. Straight after the high, you get a huge super trend bar down. That's also the start of a waterfall. Few weeks, mucking around here, little up, down, get everyone wrong. Then again, another one of these huge down signals. And down it goes. Straight after the little low, you get this super trend bar up, which is followed 1, 2, 3, 4, 5 weeks later by a super trend bar down. So the last signal we've seen is a super trend down, but we haven't seen huge momentum from that. So while you can see these signals, some of them exactly the same signals, some will lead to really fast vertical movements in the chart, while others won't. But you still need to be aware of them because they're very dominant trend indicators on the 6-day and longer charts. Here's gold. Now, I've called this death of a bull market, and the good news is that it's no longer in a bear market. And you can see here gold straight after the big high, the super high, the all-time high, back here in September 2011, August I think it was. You had this huge bar down. There's the overbalance in price straight away, followed by another one some months later. Look what's happened recently from this last low in December 2015. You had an overbalance of price up, and then you had this big rally up. I've missed one here. There's the overbalance of price down, but hasn't taken out the lows. This thing is consolidating. Gold is trying to build a base to rally. It's got a few things against it at the moment, but this is your last super trend signals here. This is not the start of a waterfall, folks. This is just overbalance of price. Okay, let's have a look at this. Apart from overbalances in time, in price, I should say, we can also have overbalances in time. They're far more subtle. Let's start from this low here in May 2016 and look at the run up. Just count them as we go. One bar down, then a rally. Okay, maybe 2 bars down at most. Up to the high. 1, 2 bars down, then back on its way up. 1 bar down, then on its way back up. 1 bar down and straight up again. From this high, which comes, I will tell you in a moment, at here we are, the key reversal bar there. January the 4th, 2017, Happy New Year. You get the key reversal, and then look what happens here. You get 1, 2, 3, 4 bars down. Now remember, in this whole run up, we've only had 1 or 2 bars down. This is 1, maybe 2, then an up bar. This is 1, 2, then back up. This is 1, then back up. This is 1, then back up. Now you've got 4 bars down. That's an overbalance in time, and that tells you the trend has changed. Overbalances in time or overbalances in price lead to super trend markets, but not necessarily fast trending markets. You'll see what I mean as we go through here. And let's look at the next one. This is gold. This is a daily chart of gold. And I'll get off my I'll get off my 6-day chart and take a look at this. So what we've got here, let's bring in a bit more data so I can give you the dates. And we have here, straight after the big key reversal bar, the grey bar at the left of the chart, back up here. This is October the 16th. 2017, of course. Straight after that, look what you get. Big bar down. I put the red box around it to show you that that is an overbalance of price, and that turns the trend down. Count in this rundown here. There's one bar up. Down you go. Maybe one bar up. I don't even count these little ones as one bar. Maybe one bar up. Maybe one bar up, and then again down. Now you get 2 bars up. 2 bars up is an overbalance in time because we only ever had a correction of 1 bar in the run down. So at that bar, that makes the trend up, and the trend remains up all the time. This is a very, very difficult piece of chart until November the 20th. Here's this bar encased in red. This is November the 20th, and that is an overbalance in price. The trend from this bar is down. Doesn't mean that the market's going to fall away and be wonderfully easy for you, but you need to have that piece of information so you can be guided for what else happens. The market then rallies, 1 up, forget the inside bar, 1 down, 1 more up, and that 1 more up is November 27th, and that's what we call a false break. It just takes out the previous swing high. For swing traders, that's where all their stops are. The market does this again and again and again, and fast moves come from false breaks. The most likely time you are to get a fast move is after a false break, because false breaks mean that the rest of the market is wrong. You're not going to be wrong if you follow the Daniel code, but everyone else is. All the swing traders are long. Short rather, with their stops above the old high. You get this false break. The market goes just to the point that it needs to suck up all those stops, and then it has an inside bar, and then it starts to fall away. And right here, straight away, look at this. This is an overbalance in time. This is the second down trend signal. Remember, we got our first down trend signal all the way back on November the 20th. Now we get 2 days down. In the rally up, we've only had 1 day down. As soon as we get 2 days down, that's the second confirmation of a change in trend. We then get 1 bar up, and that's on December the 1st. Now remember this, folks, as long as you know the trend, 1 bar counter trends are great entry points. If the market can only rally 1 bar, means it's probably moving pretty fast to the downside. It's a very weak market. You could have sold that low as a second entry point. Down it goes. A lot of money, $2,500 just in 1, 2, 3, 4 days. Very nice bit of trading. But as I've been talking to you about now for months and months, you need to know the trend to maximize or optimize your trading. This next chart, a really interesting one. This is copper. Been a lot of conversation about this. John from Coffs Harbour has put a post in forum about it. For those of you who are members, go and have a look at that. I've put a burst about it on the news page at the Daniel Code website, and this has just been an extraordinary trade. It starts off a bit difficult, and the reality is that it's not all smooth sailing when we're trading, so it's well to recognize that. And on this bar back here, this little one here that's got the red writing beside it, that's November the 15th, and that actually set up a buy signal. There was a time buy signal there. Might have been others as well, I don't recall. There was certainly a buy signal there. If you took that buy, you were long on November the 16th. That's this bar here. And your stop loss was 2 ticks below the setup bar, which was November 15th, the previous bar. look what happens. The very next day, 11.17, it pokes through below those lows. It takes out your stop. And you say a rude word. If you're really upset, you can say a rude word 3 times. But remember, when you took this buy the day before, which is on this bar, the date of that is November the 16th, you were taking a trade against the apparent trend. And it would have been really prudent and quite permissible to use much tighter stops. In other words, the total loss on that trade, if you had your stops in the default position, if you buy the high of a setup bar plus 2 ticks if it's futures, 5 ticks if it's forex, then your stop loss goes 2 ticks below the low of the setup bar. That's the traditional place for us as well, at least us. Not everyone trades that way, but I do. And if you're entering into a trade against the trend, you can use a much smaller stop. In fact, in this case, if you'd used a smaller stop and it had been a trailing stop, very good way to enter counter trends. What appear to be counter trends, they may change when they finish the bar, but this bar went up far enough that you probably won't hurt too badly, because from the entry point here, this bar actually went up excuse me, $362. So if you had, for example, a $500 trailing stop on that counter trend entry, you only lost $140. Anyway, we got stopped out, but don't despair. There's another buy signal created by this bar of 11.17. And once we bought that, off it went, and it went up 1, 2, 3, 4, 5 days straight up. Doesn't happen very often. It's very nice, a really easy $1,800, so long as you persevered after that sort of full start. And when we got up to the high of this particular move I'm showing you, November the 24th, there was a time sell signal right there. And if you sold that bar, reduce my mic level or move slightly away. I think I'm probably just getting excited about how great that trade was. I'll see what the volume's like. How's the volume, folks? Is it too loud for you all? I can reduce it a bit if you like. There, that's about normal. No, Dave says it's good. Okay, there we are. Then we had a time sell signal. Down it went. The first bar down, this bar of 11.27, this bar down of 11.27 immediately told you immediately told you that the trend was down. Why is that? It wasn't really a super big bar by any means. It looks pretty average, but it was an overbalance of time. In the previous run-up, you had not had one counter trend, 0 counter trends. So the first time you got a counter trend, even one, tells you that that's an overbalance in time, and the probability is that the trend is now down. Now remember, everything we do in trading is probabilities. There are no certainties in trading, just like life. It's all about probabilities. But the more we understand about trading, the more we can tilt these probabilities in our favor, so that we get pretty close to being nearly flawless. The worst thing that ever happens, if you do a Daniel Code tutorial, you'll get to the stage that the worst thing that happens to you is that the markets just don't have enough volatility to move away on a particular signal, and you will say, I was right and I lost money. But you won't lose very much money once you've learned to trade. So that told us the trend was down, and we ran down into this little bar here. This is November the 30th, and we got a time buy signal there, and look what we got, 1 bar up. Again, we're trading against the trend. If we're trading against the trend, we use a smaller stop. We're aggressive on our stop. Use a trailing dollar stop if you like. And we get out first profitable close if we think we're against the trend. So we entered that trade, and it went up a nice little bit. I'll just tell you how much before it did its little pullback shot. So it went up $812 from where the trade was elected to the high of that bar. If you had a $500 or $600 trailing dollar stop on that, you got stopped out, but you made $300 odd profit. I was still in at the close and I made $50, but that's fine because that's one bar up in a downtrend. There's nothing about that up bar that suggests there's a change of trend. So we know the trend is down. And if the trend is down, we have to get with the trend. What's your job? Get with the trend. Try to sell that low. The trade doesn't get filled. Next bar is an inside bar. That's a null or a void. Excuse me, I'll have something to drink in a moment. Stand by. Coffee. Oh, well, it's daylight down here, folks. I'm sure you're all drinking something far more interesting. But coffee, because it's 12 o'clock midday on Friday, down under. Inside bars, nulls or voids, carry forward the last valid signal you had. In this case, we had a time sell signal, carry it forward. You got that big hit down, 3,450 per one contract into the close of that drama day. As I said, a lot of the folks who've done tutorials got that trade. John from Coffs Harbour's posted about it in the forum. I've had a number of emails. Knowing the trend is what allows you to take these trades. Okay, let's move on. And here we are. Here's the next one. This is coffee. And this is interesting because there's a failure in here. And we do have failures. There's no point in pretending that trading is all win-win-win. It'd be nice if it was. Probably get boring. But there's a really interesting and annoying failure in here. Good trading market, coffee. Really good trading market. So let's see where we are. This is soon after rollover, and we've got 1, 2, 3, 4 bars up. Let me have a look what we've got. Here we are. So we had a TO3 buy signal posted on the night of November the 20th and elected the next day, November the 21st. And this bar here, November the 20th, actually created the TO3 buy signal. Trade was elected the next day above the high of that bar. Up it went, little inside bar, pretty big bar with a substantial pullback, and then an inside bar. And this inside bar created a minor sell signal. Now, in fact, the bar before created the sell signal, minor sell signal. Minor time cycle as well, little inside bar. You've got a number of options. If you're trading close to the market, you had your stop below the inside bar, with a low of which was 127.55. You had your entry below that, and then you got whacked in an outside bar. I know everyone hates outside bars. They're the universally loathed part of trading, but they are a reality of trading, folks. So you have to know how to deal with them. Again here, you should have known that the trend was up. And if the trend is up and you take a sell, that's a counter trend trade. Be very aggressive on your stops. And if you get an outside bar, if it is possible for you, I know a lot of you put your orders on and go off to work. It's not possible for you to look at machines during the day. If you get an outside bar, you need to stop and reverse at the point the outside bar is created. In other words, 2 ticks above the inside bar. If you are looking at trading screens during the day, I beg of you, put your orders on, go away, look at the market 2 hours after the open for 5 minutes and 2 hours before the close. Don't sit there looking at trading screens. I guarantee you we're like greyhounds. Our DNA, we're hunters and killers, and we're also fearful, and our DNA is such that we will be affected. And if you sit there looking at a trading screen live, I promise you, you'll either grab at profits or you'll say, whoa, 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 my trade's underwater, I've got to get out, and that's not that's not the way to trade. In fact, that's a dreadful way to trade. You'll just lose money doing that. But look at the 3 alternatives here. If you're really aggressive with your stops, and you tried to take the sell trade below that, low of the inside bar, you went down, you had a trailing dollar stop, you probably saved your cost of your entry, then you got an outside bar, you got whacked. If you took the entry below the last bar that was not an inside bar, which is what I suggest if you're new to trading, then underneath that bar, this is the bar we're looking at on 1124. Okay, try now. I've been cut off from talking for a while. Can you hear me now, folks? Akshay Rose, yes, you can. Okay. I'm wondering where I dropped out. We had a little drop out there. I'm talking about coffee. Very briefly, I'm telling you, I gave you a long dissertation about getting stopped out here. If you were following the stochastic stop, you didn't get stopped out. If you were trading either selling below the inside bar or even the previous bar, which is what I tell people who are new to trading, use your entry from a inside bar. Don't sell at the low of the inside bar if you're new to trading. Sell at the low of the last bar that was not an inside bar. Even that didn't help. You got stopped out, had the ultimate ignominy that the market stopped you out and then went roaring up. That happens if you had a really tight stop on the downward side because it was against the trend and you knew to get long. When this bar created an outside bar, this is the bar we're talking about, is the excuse me, 1128. Boy, an awful dose of hay fever today. Do excuse me, folks. Unpleasant for you. I apologise. Okay, here's our big bar down. This is 11:30, and this tells you that there is an overbalance of price. This is by far the biggest down bar on the chart, and if you hear clunking in the background, that's just me having a cough lolly. And then if you know the trend is down, inside bars make really good re-entry points. They were talking about Trump slurring his words the other day in a broadcast, a bit like me with a cough lolly in my mouth. So the answer is that stops do matter. The more aggressive you are on the stops, the more likely you are to run into trouble. But occasionally, have a look here, almost regardless of what you do, you're going to get whacked occasionally. That's the cost of doing business. Okay, let's move on to the next one. This is corn. I want to show you these signals, particularly for those of you who don't follow the TO3 and plus signals. Have a look at this. Great trading in a very interesting market. Corn's been really dopey for a long time, and all of a sudden it's breaking out some spectacular volatility. Right here, what we're looking at is this down trade here, big bar up. Make sure I'm on the right contract. It'll look more like it. Oh, actually, you've got a big rollover there. This is the 2018-03 contract. Just let me bring that up, folks. Won't let me do it. But you can see a huge bar up, turns the trend up. It was a TO3 buy. This is in November. Ran up 3 days into the high. Had a time sell signal there, down 3 days, another TO3 buy. Up it goes 1, 2, 3 days into a TO3 sell, huge monster bar down. This has been a consolidation that normally you wouldn't think is good trading, but these bars have been so big and the signals have been so perfect that you've just been in the money the whole time recently in corn. This is British pound, Japanese yen. We're doing showing you a lot more contracts in Forex today. Forex trading lately has just been absolutely sensational. You can see this here, GBP, JPY, GBP, JPY. Here we are. The kick out came on November the 28th. Big, long, multi-week consolidation, trending downwards, sort of a down-sloping, sloppy, low-class sort of a trend, some up, some down, horrible. All of a sudden we got a plus buy signal and whack, it started to run. Got a big bar up, then another one, little bar down, and then into the high. That's one of the plus signals, the plus suite of signals. From the high, we had a plus sell. Took us down 2 days, and today we had a plus buy. Now, the plus signals are basically, they're variants of the TO3 type signals. They're the same sort of thing. They have mainly elements of price, but some elements of time in them. But they're signals that don't set up correctly to meet the definition we have for our TO3 signals. So they're the next level, if you like, of TO3 signals, and they're available under the TO3 plus signals, which also includes the blue line trades. If you're not getting those and you're interested, you can ask Terry to give you a trial of the website Pro, which gives you the TO3 signals and the plus signals and the blue line trades as well. And I'm sure Terry will be happy to give you a trial of that if you haven't seen it already. As I say, don't miss the plus signals, because have a look at this chart. There's a lot of money there. Just when the markets slightly get out of time, that's what causes them to not quite set themselves up as our normal TO3 signals. This is sugar. And I wanted to talk to you about failure points. As I've said, we do have failures in our signals. It's important to know what they are and what it means. Whenever we have a TO3 or a blue line buy or sell, and that trade is elected, so here we are, Let me bring up sugar on the other computer so I can give you the dates of this in case you want to follow it on your own machine. Here we are. So little inside bar. So here was this started with a plus sell on November the 28th. So you sold that, went down. The next bar was slightly down. The next day we got the end of the day on November the 29th. We got a TO3 buy signal. Looking at that now, it's unusual. It doesn't seem to me, looking at the chart, it went down far enough, but it did create the signal. They're all computer generated, so it's valid, but you knew the trend was down. I hope you knew the trend was down because the bar of 11.28 was the biggest down bar since 11.02. That should have told you there was a probable change of trend. Those of you who've done a tutorial and were using your tools properly certainly knew there was a change of trend. So the trend is down. We had a TO3 buy, which was elected, and we had an up bar on November the 30th. And look what we got. It ran up, it turned around and came down. Now, the setup bar, the bar that creates the signal, is 11.29, and the low of that bar is 14.92. And I put the blue line on to show you that's the failure point. If the market takes out that number, that means the trade has failed. And if the trade has failed, you're wrong, and it should be the other way. So we have the up bar where we got elected. Then the next day, we get a little down bar, December 01. Then we get another down bar, December 04, that breaks through that number and does a key reversal bar up. And the next day we get this little inside bar which closes. You can't see the close, but it's right where that arrowhead is, where it says short on close or next open. If you're a super aggressive trader, you can get short where the failure point is breached. If you are a more conservative trader, you will wait till you get a close below that level. Now, if you've had a valid signal that's been elected and it fails, that's a new entry for you. Okay, so you see that little inside bar there. You get short on the close or you get short on the open the next day. Failures create new signals. Okay, and some of these signals do fail. And keep an eye on what the setup bar is. Every time you have a signal, look for the setup bar and mark on your chart the failure point. Because if you get a failure of the signal, that's in itself an entry. For those of you who are following silver, I don't think I've done a chart about it here, but this is a fairly subtle rendition of it. Silver has been hitting its blue line targets just like it knows the numbers, which it does, and it's been following them. And it's been breaching them. It's been setting up buy signals that have not been elected. That's not quite the same thing. What I'm talking about is whenever a signal has been elected, mark the base or high of the setup bar. That's the bar before the trade's elected, which will be the bar which created the signal. And if you get a failure point, if you hit that failure point or you get a close below, it's even better, be short. It means you're wrong and you should be the other way. Okay, so this losing trade on the buy side was more than compensated for by the monster short trade after the failure point. Okay, let's have a look at this, folks. For those of you who are trading indices or looking for it, this is the 12-day chart of the S&P, and have a look where it is. It's right at its major target now. That's the 12. I'll just get the particular chart so I can give you the numbers. Here we are. This high is 2665, and there's the number 2669. Now have a look what's been happening here. This has been sort of really interesting. Let me get my highlighting tool again, spotlight tool they call it. We started getting this numbers here back in February. I was telling you about. The first was 2400, actually 2393. That's here where this red dot is, and this is a 12-day chart. So we then had, excuse me, rotten hay fever. I'm not quite sure how you can contract hay fever when you're 65. I've never had hay fever in my life till I came back to Australia after living in New Zealand for 12 years. And it's the most annoying, dreadful thing. Do excuse me. Look what happened here after we hit that 2400 number. We had 1, 2, 3, 4 periods where it was held at that number. 4 periods is 2 months, basically. This is a 12-day chart. Then it ran up to the next number, was 2493. It hit in here, 1, 2 down bars. That's a month it stopped it for. Ran up to the next minor number, 2601, reversed, and stopped it there for 2 weeks. Now look where we are here, right up against this next number, 2669, and this bar, this 12-day bar that we're in at the moment, is 2665. And contract rollover on Friday. Contract rollovers are great times for trend changes. So be really alert to a change in trend in the major indices. I'm trying to tie that timeline into the passage of the tax bill. All the euphoria about the tax bill, which will be misplaced, I promise you, they always are. Governments just want more and more money all the time because they can't stop spending. And that applies to all governments. So there's not going to be a tax bill that's going to give everyone a significant reduction in tax. Government wants its tax, and governments want more tax all the time because they cannot stop spending. It's the universal law of government. But anyway, this last little bit of the run up, you can see this market's gone absolutely parabolic. Really feels like it's driven by emotion. Really feels like the sort of top you get when you get a blow off top. What's driving it? All the excitement. The corporates think they're going to do great out of this new tax legislation. That's largely not true. Citi came out the other day and said they're going to take a $20 to $25 million hit if this, each year if this legislation goes through. But look, the hype is there. The people are sheep. They'll believe anything they're told pretty well. And there is enough instituted belief in this process for the bulls to keep pushing this market higher. So there's two things. Either one, the legislation has a setback. That'll be a disappointment to the market. The other thing is, don't forget the old story, buy the rumor, sell the deal. And this is likely to be at least an intermediate pullback. When's it going to happen? Contract rollover is about my best bet. It's met its next target. It's right where we could expect to have a pullback. We've said this before. We've marked 1, 2, 3, 4 price levels on this chart. There are more further up, which I'll tell you about if this level's breached. But every one of these levels has caused everything from a 2 weeks to 2 months pullback, correction, slowdown, and run. So I like this chart. I like these numbers, and I really like the fact that we've got a contract rollover on Friday. Good time for change of trend on or shortly after contract rollover. So be cognizant about that, folks. I won't be posting signals for these markets because we can't post signals when we have rollover because the Daniel Code website from Trade Navigator works on the 057 contract, which is a continuous contract, but it's a continuous contract that has big gaps in it when we have rollovers, if there's a premium or a discount on the rollover. So it's 2 days after rollover, really, before I can post new signals. So just be aware. Don't wait for me if you think there's a valid sell signal there. Just put your order on and let the market decide. I'm just running through here finally, folks, some of the more recent trades this week. This is dollar index, US dollar index DX. Most of you don't get to see No Fear in the Market Rose, quite right. Absolutely right. Most of you don't ever get to see our trades, so sometimes, very occasionally, I'll actually put them on the members charts. Most of the time, I don't. And I just want to show you the sort of thing we do. Here's the dollar index this week. We had a buy 4 days ago. It's kept going up. This is the S&P E-mini. A bit of a lesson here, folks. Some of you know it, some of you don't. We got this ES. Let me get this up for you. Here we are. ES 057. Stand by. Here we are. ES. Okay. We had a sell signal. We had a TO3 sell signal for Friday, December the 1st. It went down, looked marvelous, roared down. Look what happened. Turned around, came back. Remember, in times of volatility, when you get a bar that is significantly bigger than the other bars, there's two of them here. There's one the bar before. This is November the 30th, up bar that pulled back considerably. December the 1st, sell was elected, roared down, hit the number, and then just turned around and came back up. The number there was 2607, was the retracement, which it made a low of 2605. When you get this big volatility in these really big range bars, folks, don't be frightened to put a trailing dollar stop on. Okay, you put your dollar, work out your dollar stop. You've got a good lot of money in this trade. You want to protect it. Put your stop on. Don't try and grab a level and get out. That's stupid. It may keep going for a long time. Put on it your risk that you've reduced risk. Protect your profits. Make it a trailing dollar stop. It'll move up or down with the market. And you lock in all those profits on that sell side. Then we had gap up the next day, continuing enthusiasm. That set up a plus sell signal, and 2 days down, plus buy signal for today. Made a little bit of money on the upside. We've got a crack of an electrical storm about to hit, folks. The thunder is rolling and ramping out there. That sometimes means that we lose internet connection, but we've got most of this in the bag and not many minutes to go. If I do lose you, I give you my apologies. This is T-bonds. Have a look for the nice trading. TO3 buy, up 1, 2, 3, 4 days into minor high. Sell signal today, elected, making money both ways, up and down, way it should be. Dollar CAD, as I said, a lot of action this week in the Forex, just been huge. Have a look at this. This is US dollar, the loonie, dollar CAD. I don't know why they call it the loonie. There'll be some reason or other. I'm sure that's very unkind to our Canadian friends. We have a lot of Canadian clients, actually. Okay, so what did we have here? Here we had on the last bar up at 11:30. This bar here, November the 30th. This set up a blue line and a TO3 sell, and whoosh, off it went. Next day, the trade was elected. Big bar down, turned the trend down well and truly. Huge overbalance in price. Went down 1, 2, 3 bars down. That's about 145 ticks, about 1150 odd dollars. Then we got the key reversal bar on Tuesday, December the 5th. Those of you who are members, have a look at the chart. There was a blue line there at 12.63, 1.2634. That low was 1.2624. And that turned around and ripped it all the way back up into today's close, about another $1,150. Just super trading on the Daniel Code signals, making money up and down the way it should be. This is CAD Chief, Canadian dollar, Swiss franc pair. Same thing, blue line buy, off it went, 1, 2, 3, 4 days up, into a TO3 sell, elected down yesterday, down a little bit further today. Soybeans, buy, up 2 days, sell, down 2 days. And here we are. Now, if you want to be a super trader, those of you who are thinking of doing a tutorial, I'm more than happy to teach you how to trade, price, and more importantly, how to trade time. Thank you, Kevin. There is a loon on the $1 coin in Canada. Their little bird, it's called a loon. That's why they call it the loony. Dean knew that as well. Thank you, Dean. Yes, great. Anyway, if you want to do a video tutorial, folks, let me know. jneedham at thedanielcode.com. I'll teach you to trade price, and more importantly, I'll teach you to trade time, which is just the new frontier of trading. It's marvelous what we're doing with trading time signals. So let me know if you're interested. Shoot me a email. If you'd like me to talk to you, send me your phone number where you live so I can work out the time, and so I don't call you in the middle of the night, and we can have a chat about your trading and where we take it from there. If you haven't already, folks, you're more than welcome to have a free trial of everything at the Daniel Code. Just follow the links at the website at www.thedanielcode.com. Click on free trial, follow the links. Any problems at all, contact Terry at support@thedanielcode.com. And if you haven't done so already, there's the thunder rolling in. It's going to be a nice afternoon. Sultry. Michael, you think it's sultry and warm in the Panama? It's a bit like that here, mate. If you haven't already, Terry can organise a free trial of Trade Navigator software for you as well. That's about it for today, folks. There's our usual compliance chart sheet that I like you to read, because it's very easy to lose money trading, and if you don't know how to trade and you haven't done a Daniel Code tutorial, it's really, really easy to lose your money, and I don't want that to happen to you. Our business here is to make money. As I say, our business is not being right, our business is making money. So do take the opportunity to learn this stuff as soon as you can. That's it, folks. I'm going to have another webinar before Christmas. I'll look forward to talking to you all then. Lovely to have you with us, Rose. Glad you enjoyed it. Same for Michael and John down there. I might see you over Christmas, John, but I'll talk to you all before Christmas. We'll have another webinar in a couple of weeks' time. So keep following up these signals. The trading has just been absolutely sensational for quite some time now. Thank you for being with me, and bye-bye.